Welcome to Bloomberg Markets. I'm Shonali Bassick. Let's get a check on these markets today because we are watching a choppy trade. The S&P 500 still stands below 6,000, but it is 0.1% higher today. Remember, the world really woke up to significant geopolitical conflict. You did earlier see a sell-off in the stock market, but we are coming back. On the heels of earnings as well, we are seeing some of that lift boats higher. The Nasdaq 100 up about 0.2%. There is still a bid in the bond market, though. The 2-year is now at 426, only about 2 basis points lower. The 10-year at 437. Remember, we have been talking about a 4.5% level for the last couple of weeks, but we are well off of that, showing the bond market is still giving you a haven trade. Some midday movers on the equity side as well, as we've been talking about a lot moving under the surface. Bloomberg's Abigail Doolittle joins us for more.
Indeed, Shonali, and with geopolitical tensions increasing, Ukraine reportedly firing U.S. missiles in Russia, and then Vladimir Putin upping the game around nuclear exposure, widening the areas that they could use nuclear weapons. You can see that some of the defense contractors are higher, but not significantly higher, not fearfully higher, all at this point up just less than 1%. But nonetheless, a little bit of green on the screen here. As for some mixed moves, let's take a look at two tales of retail. On the one hand, we have Walmart trading higher, Lowe's lower. Walmart up 4.2%. They put up a great quarter, raised the outlook. Apparently, value-seeking consumers are really still helping out Walmart. Lowe's, on the other hand, they did beat estimates. Sales, on the other hand, declining 1.1%. So folks not very pleased by that. And there was commentary about slowness in the housing market, interest rates being high, holding people back from doing new activity on their homes, especially those important big-ticket items like refrigerators and stoves. And then finally, the big winner on the day, up for a third day in a row. So much volatility in Supermicrocomputer on the year, up in a big way, down on a big way on the accounting fears, and now in the news that they do in fact have a new auditor, BDO USA, and that they did submit a plan to NASDAQ to file that delayed 10K at some point to keep their listing. Well, you have those bears out because there is, of course, almost 20% bearish short interest on the stock. And who knows, Shonali, maybe there's some actual buying here as well.
Abby, thank you so much for taking a look at everything for us. And remember, we are just 2 months away from the new Trump administration stepping in as Wall Street mulls over the complications and the implications of the president-elect's pro-business agenda. Take a listen to what JPMorgan CEO Jamie Dimon told Bloomberg last week about M&A under a Trump administration.
Whether you voted for Trump or Joe Biden, a lot of bankers, they're like dancing in the street because, they've had successive years and years of regulations, a lot of which stymied credit, and so and you could have kept the banks equally safe, but had them do more credit. And so, like, to just give you an example, the average bank in America, I think the number is, used to have $100 of deposits and $100 of loans, and now it's $100 of deposits and $65 of loans.
And joining us now for an exclusive conversation is Madhu Namburi. He's the Global Chair of Technology Investment Banking at JPMorgan. Certainly a critical sector for deal making. And before we talk about what potential big ticket mergers may or may not be out there, I do want to start with another area of the deal market that investors are starting to get excited about, which is the potential return of the IPO market. Major question mark around how fast it could come back, isn't there?
Well, first of all, thank you for having me on the show. IPO market and M&A, we are very bullish for 2025. We think it does come back. I think if you think about fundamentally the dynamics that's going to drive that, there is a dearth of supply. Both private equity and VCs need to get their DPIs up significantly. And one of the big markets where they use to get those exits are through the IPOs. And we think that's going to come back. The other two things that's going to drive the return of IPO markets, if you think about it, is number one, the investor demand is there. People want to put money to work. I mean, if you look at the tech IPOs, they're up like about 45% versus S&P, NASDAQ in the 20-25% area. So people want to put money to work. When we look at our analysis, we have about 750 quality companies in tech alone that want to get out. If you look at the overall run rate of tech IPOs, put 2021 aside, 60 to 70 companies go public in a normal year. That's a lot of backlog. So we do think higher quality companies will get out. And the third thing which will bring the IPO markets back is valuation. Market has, especially after the elections, market has started to reward back growth. We do think people will care for profitability, but differentiation from growth is back. What used to be a 50, 60% growth or even higher in 2021, I think if you are a 25, 30% grower, market's going to reward you as a premium.
Now, it seems then like companies, young companies in particular, have options. When they're thinking about that path to go public or that path to be acquired by a strategic buyer, what does that look like under the surface right now as you're advising firms?
So let me just level set some numbers. Global tech M&A is about $800 billion volume per year on a normal year, put 21 aside. If you look at that, last year, 2023, we had only 500 billion. It was down quite a bit. This year, we're already tracking to 650 to 700 billion. So it's back. But if you look under the hood, what area is softer? It's the large deals, the 10 plus billion. I know you guys love to talk about those deals, but and that's where you feel like the volume's light. But the rest of the deal volume below 10 billion, it's actually back to pre-COVID levels. So, and within that, call it the 100, 150 billion shortage, that's largely coming from strategic companies buying. And that's where, Jamie's comment, regulatory concerns, it's not just the approval, but the time it takes to get anything reviewed. What used to be 6-9 months is now 12, 18 months long. And that has become a big impediment for large deals. We do think that should open up, and that's the volume. Financial sponsors, I know you had Holden from Thoma Bravo on your show last week. As he said, I think the sponsor investment is back to pre-COVID level. And so we feel there is going to be a big volume shift towards that, especially given my commentary about the larger companies.
Yeah, around larger companies in particular. I think there's been an open question in the market on how much that regulatory environment could roll back, particularly as it pertains to antitrust. You've heard two different types of things coming out from the people close to the president-elect, some of which had included skepticism around large companies getting larger. Do you think there will really be a propensity to do large-scale mergers in the world of technology?
I think there's still a lot unknown. So as Trump and his administration takes into effect, I think here's what I will say. As I mentioned, putting the policies aside, the timeline to review these deals, 12, 18 months, causes a lot of disruption. Disruption for customers, disruption for employees, investors, and that has become a big impediment. And because if the deals don't go through, the company that's selling feels like they're kind of left hanging. So I do think the process should become more streamlined. That's the expectation and the hope, which should get people more bold to start venturing back into these larger deals. We have found, surprisingly, if you look at the deal size 5 to 10 billion, it's actually up 30 to 35% over pre-COVID levels. So the volume actually has interestingly shifted from 10 plus billion to that 5 to 10 billion, which is great for both private equity and VCs. The volume actually below 5 billion is actually kind of flat.
Yeah, well, on the private equity part of things as well, we're talking about strategic so much. You made this point about private equity returning money to investors, but what about putting more money to work? You are seeing more of it happening. Are you seeing private equity firms wanting to do more take privates?
If you look at the assets under management by private equity overall, it's 4+ trillion. By the way, 3 years ago, that number was 2 trillion. There's a lot of money. Even VCs, I know that was not your question, also has a 300 billion of dry powder. So there's a lot of money that is waiting to be put to work. I think that we have already seen that back. The mega deals, the $15, $20 billion or even bigger take privates, I think right now have gone on the sideline just given where DPIs and the LP dynamics is. But we do think people are looking to put money to work in that I would call anywhere from 2 billion to even 10 billion. In tech in particular, there is a lot of interest. Recently, $8.5 billion deal went private. So we do think that deal activity is back. The debt markets are helping. Spreads are at an all-time low again. So we do think that activity will continue to further.
Who are the main buyers out there, especially on the strategic side? Because you look at big tech companies, and it is a fun thing to talk about those big ticket tech companies doing more deals, but you're seeing more and more deals being done by non-traditional companies outside of tech looking to gain technology experience. What's happening the most among your clients right now, and which subsectors are you seeing as the most active?
So by and large, across tech, everybody has subscribed to the philosophy eventually software is going to be everything. So we are finding companies that don't play in the core domain, build that tech expertise, exactly to your point. That phenomena will continue, in fact, further. I think AI will remain a big focus going forward. I think there'll be more tuck-in AIs, smaller deals in terms of acquisition, people making acqui-hires and building that AI talent. But there's going to be a lot of money that will go into that space. We do think, for the regulatory reason that you had mentioned, people are looking at areas that are more adjacent as opposed to directly in their field, just to make sure the regulatory bar, they get past the bar.
It's interesting. I want to pull up a few recent deals that you've done, because there have been very, very, very large ones, including the Broadcom VMware deal that was almost a $70 billion deal, $12.5 billion Qualtrics Silver Lake deal, Cohesity and Veritas, a $7 billion deal, Instructure and KK. Three of these deals, and we were listing them on the screen, involve private equity firms. What happens to valuations now that you have the potential for private equity to be competing with strategic at a greater scale?
So interestingly, if you look at the valuations, I'm going to talk about revenue multiples in software. That's what most people focus on. If you are a grower, 20+% top line growth with profitability, the multiples are a turn higher than pre-COVID levels, but half of where they were in 2021, okay, which is big. But if you are a 10 to 20% grower, you're kind of flat pre-COVID. Again, half of what that was in 2021. So we do think, I think companies that have healthy growth, doesn't need to be crazy growth, but a clear line of sight to profitability, you will see those companies, private equity in particular, will go make a play. I think we're finding a lot of VC money going in AI right now in particular. But I think even the application space, which will benefit from AI, you will see it'll attract a lot of money going forward. So when we think about valuations, our view is as the IPO market opens up, I think it will be open, it'll be wide open, but we think it'll remain disciplined. It will not go to 2021 levels, but the pre-COVID level, which was backed by fundamental growth and profitability, I think that's where the deals will happen. And I think private equity guys are very smart. They will continue to do very, deliberate investing.
Madhu, thank you so very much for joining us here in studio. That is JPMorgan's Madhu Namburi, with a very, very close eye on what is happening in the world of technology and deals. But we're going to move next to the consumer in search of value. That's as inflation persists. We're going to break down what we learned from earnings from Walmart and Lowe's. That's all up next, and it may not be always what you think. This is Bloomberg. This is Bloomberg Markets, and I'm Shonali Bassick. It's time now for the stock of the hour. We're watching Walmart and Lowe's, the retailers out today, both with earnings. They are facing opposite sides of the consumer. Walmart is seeing strong demand, while Lowe's sees sales squeezed, and you can see the reaction in the stocks today, with Walmart at a record, up almost 4%, 3.7% at the moment. Lowe's down pretty much to the same degree, down 3.4%. We're going to be joined now by Karen. She's the Melius Research Analyst who has a buy rating on both companies, seeing a 15% gain in both stocks. And you take a look at just today's divergence and perhaps break it down first on the worries behind the different types of consumers that are buying at each of these retailers.
Well, I mean, I think for Walmart, they're gaining share across all spectrums and all cohorts of income levels. And that has kind of been a continuous theme for Walmart. And it's not low end, it's not just low end, it's high end. And that's a function of the fact that they have introduced a lot of services that are convenient. And it's a function of the fact that they've lowered price points in essentials. They've lowered price points in general merchandise. And their product quality has just gotten better. So, Walmart used to be, years and years ago, it was a stigma to shop at Walmart, and it's not anymore. I mean, you're proud to be smart about where you're shopping and proud to save money. And Walmart's product offering has just gotten better. So you're seeing the momentum build from years and years of them looking to, introduce more offerings.
There's clearly a lot of excitement around the stock today when it comes to Walmart. But Karen, I do want to kind of poke holes for a moment here and talk about the bear case as well, only because if you're watching people trade down, then how much more downward price pressure is there on certain goods?
Well, I mean, I think they have many alternative revenue streams, so they can keep investing in price and not pressure margins. Like, for example, this quarter in the US specifically, you had 400 basis point delta on total top line sales and operating profit growth. That's happened before, but that's not a normal algorithm. So I think this is years and years of investing in the business that's coming to fruition with more ammunition from alternative and more profitable streams to keep lowering price. And I mean, they said today 6,000 rollbacks on price that will ultimately potentially all become permanent. I mean, it's not clear, but when they do rollbacks, many become permanent. So
when you think about who's vulnerable to that dynamic, who is kind of the anti-Walmart here?
Well, I mean, they're doing a lot of damage to the dollar stores right now. I mean, I think that conventional grocers are definitely at risk because, again, Walmart's getting better and better. Walmart did make a conscious effort to introduce, more lower price point items and lower pack sizes for a consumer that they thought may become more pressured. I mean, this is a decision they made in March. So I think it kind of caught some of the dollar stores flat-footed. But they're definitely taking share from conventionals because they're just getting better with their offering, in food specifically, but they're also getting better in general merchandise. The only place they're kind of lagging probably still, which they acknowledge today, but would always acknowledge, is apparel.
Karen, we have to leave it there, but of course, Walmart trading at $87, getting closer and closer to the $95 you have on it. Karen Short of Melius Research, we thank you so much for your time. Now coming up, geopolitical tensions are flaring. World leaders, of course, are gathering in Brazil for those G20 meetings. We're going to go live to Brazil next. This is Bloomberg.
We will be taking this as a qualitatively new phase of the Western war against Russia, and we'll react accordingly.
That was Russia's Foreign Affairs Minister Sergei Lavrov making a statement after Ukraine struck a military base in Russian territory using U.S.-made missiles. Ukrainian President Volodymyr Zelensky also speaking today, saying Ukraine, quote, must push Russia towards peace. He also urged more sanctions on Russia. For more on this, we're going to go now to Bloomberg's David Gura live at the G20 summit in Rio. Perhaps maybe start talking about the fallout among world leaders outside of the United States when it came to what happened between Russia and Ukraine just a number of hours ago, really, still.
Well, those words from Sergei Lavrov really resonated across all of Rio. He spoke in English. That was extraordinary in and of itself, making that point to Western nations that they should take a very close look at Russia's nuclear doctrine, which Russia just updated. And the change that they made in effect is if a non-nuclear nation like Ukraine were to attack Russia with the help of a nuclear power, that would be a sufficient enough threat that Russia could retaliate in kind. So the rhetoric really escalated quickly, and we've seen that kind of spill over into the bilateral conversations that have been happening on the sidelines of the G20 summit. One that happened very early this morning was between Olaf Scholz, the Chancellor of Germany, and President Xi Jinping of China. Now, President Xi did not address this directly in his remarks. He spoke very broadly about the crisis in Ukraine, but didn't address what had happened overnight. Olaf Scholz is a fascinating figure here in part because he recently spoke with Vladimir Putin of Russia by telephone. And he, of course, briefed Volodymyr Zelensky of Ukraine about that both before and after that call. But many world leaders here, President Xi among them, eager to hear sort of what they talked about and sort of what might lead potentially to a kind of negotiated settlement here as we see this kind of escalation here in recent hours.
We have just less than a minute here, but also want to get your thoughts here on what's going on in terms of the uncertainty around the presidential transition and what might be new under a Trump administration as it pertains to Ukraine. How is that being addressed?
Yeah, I mean, all of these leaders here have been dealing with that variable of not knowing sort of what the incoming president's policies are going to be. So this just kind of puts it into stark relief on this particular issue. We, of course, had heard, Shonali, from the president-elect about his plans to end this war on day one. I think a lot of these leaders are worried about what's happened overnight, about this crisis growing, and all the while they don't have real clarity from the president-elect about sort of how he would handle things going forward. So it is a huge variable here in this conflict as it develops, and something I think a lot of these leaders are tracking closely. Of course, the president-elect isn't here, so they're waiting for him to sort of weigh in and make a statement of his own. We'll continue to watch for that.
A lot of uncertainty, but certainly a lot learned over the last couple of days. Of course, David, thank you so much for all of your coverage, of course, in Brazil, covering the G20. Get home safe. Now, I'm Shonali Bassick. That does it for Bloomberg Markets today, and it certainly has been a surprising day. Markets are higher on the heels of earnings, but of course, we have another big market moment just tomorrow with NVIDIA. A market really waiting to see the results. This is Bloomberg.